Welcome you. Today we're diving into something pretty fascinating happening in the financial world. Imagine this. A stock just skyrockets, right? Gains nearly 250% in just a couple of weeks. And then a really big investment firm starts selling off millions of shares. Seems totally backwards, doesn't it?
It really does sound counterintuitive on the surface. We're talking about Cathie Wood's ARK Invest, and specifically their recent moves with Circle, the company behind the USDC stablecoin, the digital currency pegged to the dollar.
Yeah.
So our mission here, our deep dive, is really to unpack this, understand what ARK is doing strategically and what it might signal for you in the market.
Okay, let's unpack it then, because our sources show Circle stock, that's CRCL, is surged, really surged, 248% over its opening price. It opened around $69 on June 5th, hit over $240 by June 20th. Just incredible. But like you said, ARK, they've been selling during this massive climb.
Exactly, and this is where it gets really interesting. Take Friday, June 20th. ARK actually dumped another 609,000 Circle shares.
Over 600,000 shares in one day.
Yeah, across 3 of its funds. Pulled in about $146 million from that sale alone.
And get this, that huge sale happened on a day when Circle shares still jumped another 20%.
Right, and it wasn't just a one-off thing. That was ARK's third big sale in just that week. If you add it all up, they sold about 1.25 million CRCL shares over those few days.
Wow.
Netting them somewhere around $243 million, just going by the closing prices each day. We saw them sell about $45 million worth on Tuesday, another $52 million on Monday.
And these weren't small funds either. We're talking sales from their big ETFs, right? The ones people track closely.
That's correct. The ARK Innovation ETF, ARKK, sold almost 500,000 shares itself.
Okay.
Then the ARK Next Generation Internet ETF, ARKW, sold over 75,000. And the ARK FinTech Innovation ETF, ARKF, offloaded about 43,000.
So it looks like a pattern, maybe selling around 300,000 shares pretty much daily during that period.
It does look like a consistent selling pattern. And what's really fascinating is the scale relative to their initial investment. These sales add up to nearly 29%, almost a third of the shares ARK bought when Circle went public back on June 5th.
Right, just weeks before.
Exactly. So it raises that big question. Why sell a winning stock so quickly, especially one that's performing so well?
Yeah, that's what seems strange. Are they losing faith? Or is something else going on here?
Well, despite these really significant sales, the data shows ARK is still a major player.
Oh, they still hold a lot.
Definitely. As of June 20th, they were still the 8th largest holder of CRCL. They still have something like $750 million worth of Circle shares on their books.
$750 million. So they sold a lot, but they still have a huge position.
A very significant position. In fact, CRCL actually became the #1 holding in their ARKW fund.
The top holding, even after selling.
Yep, accounting for about 7.8% weight in that fund.
Okay, so maybe it's not about losing faith then. What's the bigger picture?
I think if you connect the dots, it points pretty clearly to a classic investment strategy, taking profits and rebalancing the portfolio. Think about it. For an active fund manager like ARK, when one stock shoots up 250% in just weeks,
It throws the fund's balance way off.
exactly, it can become a massively oversized part of their whole portfolio really fast.
Yeah.
So trimming that position isn't necessarily a negative signal about the company itself.
It's more about managing the fund's overall risk.
Precisely. It's a disciplined move. You lock in those incredible gains, you manage your risk exposure, and you bring the fund back toward its strategic allocation targets. It keeps things balanced, especially when dealing with assets that can be volatile, like those related to the crypto space.
Okay, that makes sense. Locking in profits, managing risk.
And they're not alone in holding large stakes.
Yeah.
You've got other big names like IDG-Accel China, General Catalyst, James Breyer, all holding significant amounts. It shows a dynamic market.
So, thinking about our listeners then, what does all this maneuvering mean for you, whether you're deep in crypto or just trying to understand how these big investors operate?
Well, I think it shows that even absolutely explosive growth can, and often does, trigger these kinds of sophisticated strategic moves from the big funds. It's not just about watching things go up. It's about understanding how the major players navigate those rapid ascents.
Right. A soaring stock doesn't automatically mean everyone just holds on tight forever.
Not at all. This deep dive really highlights that sometimes a huge surge is actually the signal, the opportune moment for a strategic trim. A way to take some gains, manage that portfolio risk, maybe free up capital for other opportunities. It's about active management.
It's a really insightful look at that complex dance, isn't it, between grabbing market opportunity and, well, strategically cashing some of it in. It definitely makes you wonder, at what point does that incredible meteoric rise become the trigger for smart investors to maybe take some chips off the table?